Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today, we're going to go through and do our daily technical analysis update of commodities, work our way through the dollar yields, precious metals, and commodities ETFs that I follow. I'll interject my financial opinions as we go through it. And if you need help with anything, check out finding-value.com. That is where I dive deeper into all these sectors, topics, looking for potential investment opportunities, sharing those opportunities with everyone in the community. I also go over a lot of different topics that people want me to go over and ask questions about so you guys can learn, at least from my perspective, my thoughts on position sizing, portfolio allocation, a lot on different sectors, why they're good, why I either like them or don't like them, and a whole bunch of different companies within all the sectors that we talk about. It's mainly at this time precious metals and commodities focused because that's where the value is in the areas. I also do talk a little bit about lithium and some of these other areas that are also down right now. We still have the coupon code. It's the last day of that coupon code, Black Friday, one word, 50% off the first month only, or a larger discount on the yearly membership if you'd like to sign up. This will switch to something else that isn't as good as this discount behind this. So let's dive in, let's take a look and see what's going on today. So starting with the dollar's still at this support level. So the support level is this guy here. I drew a trend line across the top here. We're kind of squeezing up on it and we're sitting literally right on top of it. Now this acts as resistance. It also acts as support. And we're kind of squeezed right in between the two. And that's what that pattern is there. So we could potentially be putting in a falling wedge. I'll draw it with a little bit better thing there. So a falling wedge is generally bullish for a move higher. And I know that's counter to what everyone thinks, but that's what I'm seeing. And usually what you get is a three hump consolidation. You usually get this kind of lead in, and then you create three humps here. We'll see if that's the case or not. But generally, downward facing patterns like this are bullish breakouts for the most part. Now, yields, they dropped today, even though we had the dollar go up a little bit. So yields were down. We had a pretty good move. Lots of volatility today in the 2-year yield. And that's just been working its way on down. Now, if they're doing QE, quantitative easing, they very well could be in here messing around with bonds. You got the 10-year yield that's also working its way lower, and that momentum is to the downside. Then the 30-year yield is flat for the most part today. Bigger picture view, this still looks bullish in my estimation on the monthly candlesticks. Big bullish engulfing with small downward pressure against resistance. That very well could still go higher. So that isn't very clear to me. The 10-year, it's a tough call. We've got support resistance, and I can move this around a little bit. It's not perfect. You know, you can move it like this and say we've got something going on. We can also put this up here and say that we've got a larger consolidation that's going on, a 1, 2, 3 hump consolidation perhaps, and then we break. And there's times too where you get these false breakdowns. It seems like whenever they've gotten these algos or whatever, these supercomputers, we're seeing a lot of false breakdowns or false breakouts all over the place. So it really requires an elevated game that goes beyond the extension of just technical analysis. Technical analysis is still there, but it does things where people start to question, you know, if you get a pullback and it does something like this, people all get short there, and then it slingshots it up where they squeeze all the shorts. It's a crazy move that some of these things are doing. TYX TNX ratio, we are up a little bit today. And this does look like a bullish formation where this could go up. What does that mean? It means that maybe we could start to move higher here in this ratio of the 30 versus the 10. And what that means historically is gold generally does well when that goes up. But again, we are very early in that potential move. It's just the bullish engulfing here and here. They generally are indicative of bottoms. We also have any way you draw this, it's going to be a broken down trend line here potentially, where we're just starting to break out as well. So this is one to watch to see if we start to move on up. TLT bond prices working its way on up barely. If you kind of back out, this is still a bearish formation from a monthly candlestick, big selling pressure move there, in a weak bounce. Generally, those roll over. So we've got a weird setup here where yields may not be done going up, and we've got bearish formation here that was formed over the past 3 months that still could work its way on down. But we'll see. We got to see more follow through here in either direction for me to change my mind. Or I should say, for me to make up my mind on which direction looks good. The 2 and 10, we do have some uninversion of the yield curve. So we're down a little bit today, and we are still tracking, for the most part, sideways here. We're not free falling. Free falling generally indicates that something bad is either happening or could happen very soon. So we're not in the free fall stage yet, but we could enter it at some point. Gold up a little bit, about $6 an ounce. Still, it's still a bearish setup for me. The only way that it would not be a bearish setup is if someone's in here hitting this lower. This day, this day, this day, and this day. But I'm also not seeing the buying pressure where we get these big elongated green candlesticks pushing us on up. So to me, it looks like we are trying to almost put in some sort of like shoulder head shoulder topping pattern. Now, if that is the case, and this starts to dive on down, and we see yields dive down with it, specifically the 2-year, if this drops, we could be getting that slowdown materializing in the market. So that we need to watch all that. Silver still looks good to me. I don't think silver looks bad at all. We've got support resistance there, kind of that double bottom. Not much selling pressure on top of it. Still looks good, so this still could go higher in the short term. Platinum down a little bit. We're starting to get towards the bottom end of the support region, and that bottom's around 920-ish. And then palladium's down 1%. I do think this is going to pull back a little bit more, perhaps. Maybe the way that you measure this is you take this, you kind of just throw it on here, and you get basically back to your support level. So I'm guessing it's going to get around that support level down here over the next maybe either a couple trading days or a week or two. Depends how fast it falls. We've got GDX down slightly, 1.89%. I don't see a bunch of big, a bunch of green candlesticks, like big green ones. It looks like the sellers are in control here, and this is just more or less I'll say a consolidation pattern. The weird thing is that we came down and sold off below this, and the consolidation, we were coming upward. Weird setup here. It's a very weird looking thing. We don't have a lot of big candlesticks through here in either direction. They're all small, which makes me think the buyers and sellers are pretty equal. So this could go in either direction. It's a tough read. We are sitting underneath this breakout here. And we're also above a bunch of support that's down here. So if I were to take a guess, I think we're going to head down here. 32, 31, and do a retest. GDXJ and all the other ones, they're all very similar. This is right on support though for GDXJ. And SILJ down 2.32. It doesn't look horrible though, but it doesn't look good. I mean, we drop down here. We've got kind of like a consolidation going on. We don't have the big green candlesticks yet. We have a little wick at the bottom here. We are getting some wicks down here. That means there's some support buying pressure there. So if the buyers step in, throw a big candlestick, I'll be like, yep, we're going higher. If the sellers come in here and blow it through here to the downside, then yeah, we're going lower. It could do that in either direction here at this time. It's not a great setup to play this in either direction in the short term, in my opinion. XAU to gold ratio, we're really low. Again, this is a really, really good value down here, but value doesn't drive the markets. Sentiment and emotional investors do. So right now, we've gone all the way down here. We've basically stopped that momentum. And we've got higher lows coming up. We've broken the downtrend line, and we're just looking for some sort of catalyst to spark us higher. Now, some people say, what could be the catalyst? I don't know, guys. But I'm not the genie in the bottle that can forecast the future, make predictions like that. But it's a cheap location. It's really cheap, and we've broken to the upside. Crude oil down 1.6%. I know there's a lot of bears out there. We're still above support. We'll see what happens next. Are we going to break lower or break higher? And there's a bunch of information that I'll share on the next Twitter tomorrow on the dot plot of commercial inventories and all that stuff. So we'll go over how overvalued or undervalued oil is historically to the inventory levels. Right now, I'll just say it is dramatically undervalued. TTF nat gas down just a little bit. Your reversal candlestick was this bearish engulfing there. But again, we're not seeing follow through, and we're not seeing large candlesticks showing that we've got buying pressure to push us higher. So it's kind of in limbo, just consolidating at the moment. And that did come from the downside up. So the longer term momentum is up, and we are encountering some selling pressure here. Natural gas in America, this does look like we could go a little bit lower. We came on down. That is a bear flag, and maybe we come back and do a retest at like 280 or something like that. Longer term, though, we are coming on up in that stair-step pattern. XOP, yeah, you know me, getting ripped today. What's going on? And we're not talking about a good kind of ripped where, you're getting ripped from working out or something like that. This is a bad type of rip. I won't give you all the ideas of what bad type of rips are. Maybe it's one like you're going to the bathroom and sometimes it doesn't come out easy, but we are doing a retest. All right, so we've got the breakout here. So here's your breakout. And here we are coming back doing a retest. What do I normally do on retests? I usually buy them. Now, this is what's difficult amongst a lot of people. People get very emotional. This is a pretty strong pullback. It happened in pretty short time frame. We went from $149 down to $135.80 in XOP. And the smaller companies obviously are down even faster and more than that. So this is pulled on back. It still looks good technically. Still looks good. We haven't broken down. Even if this dips like this and gets a big reversal candlestick, do not lose your load in your pants here. Like, calm down. Don't get too emotional and just focus on the charts. We've broken out. This could potentially be a retest. Let's see what happens. We haven't broken out to the downside on oil. Now, if we break out to the downside of oil and this thing starts to tank like it has here, yes, it would be a lot more worrisome. We did get unemployment numbers that are up a little bit. So there is a little bit of that recessionary fear in the air here. Here's XLE. I'll bring this one up too, and that's doing something very similar. We broke out, and we're doing a retest. We also have this nasty gap here, and it very well could tag that gap, maybe even next trading session next week. So don't lose your load in your pants here. I wouldn't say this is a great setup. I don't like seeing it drop like that. I'd much rather have green candlesticks coming up like this, and then the small little leaking pressure all the way back to here in some falling wedge where we can rip it. But this is what we have, and this is what it is. And maybe tax loss selling pressures is having an impact. I don't know. On XLE, probably not because it's almost at all-time highs. Coming down, OIH also getting some really strong selling pressure here. Now, this is going to be double hit. Why? Well, oil's down, and OPEC just released that, I think this was yesterday or 2 days ago, that they are not going to be increasing production. So you're going to see weakness in your energy service companies. You're going to see weakness probably in shipping it, just the tankers. And we have seen that weakness. We have felt that weakness. So right now, let's see what happens. But that is a pretty large selling pressure move these last 3 trading sessions. And I think that has to deal with OPEC cutting back production, which will impact energy services across the board. It'll be offshore and onshore. Newcastle coal futures down a little bit. It is looking like it's trying to slow that move down, at least on the daily. Weekly still looks a little bit weak, but we are underneath resistance. We still haven't broken out yet, and we are above support down here. Sprout Physical Uranium Trust getting a pretty big boost today, 3.6%. It looks good. So we've got breakout, big buying pressure, nice little kind of downward falling flag pattern, nice big bullish engulfing candlestick there, and it looks good to go higher. So that looks good. Let's see if that momentum can continue. We're trying to break out of the bigger pattern, which is this big flag pattern. You can see that. It's a nice little flag pattern there. You can see the bullish engulfing on the monthly, the small selling pressure, and another bullish engulfing on the monthly if we close the month strong. So this looks good to go higher. It looks good to go higher on a longer time frame. Uranium futures pricing squeezing on up. I can probably even manipulate this a little bit. We could draw it like this, and maybe we're still in a larger falling wedge candlestick pattern. We've got URA down 0.5%. It's on support. Everything looks okay. There's your flag. It looks good to work its way on up. I'll get off this support level. So I think it looks good. URANM also doing something very similar. Flag patterns looks good to go higher. And URNJ, it's the same situation. We did get a bullish engulfing yesterday or last trading session. That bullish engulfing is still active. It's still good. And they can stack up. So this is just a flag pattern, guys. Still looks good. Copper just working sideways. Still looks good to go higher. We've got our support. We tried breaking down. It failed to break down. Came back up. Big bullish candlestick, small selling pressure. So that looks good for copper. Dr. Copper. We've got COPX down a little bit, down 1.8%. So a lot of people ask why. Why did copper go up 0.2% and COPX go down? Good question. I don't know the reason. No one does. But we have a bullish engulfing here. We got some selling pressure today. Be patient, guys. We're sitting on top of a lot of things. Now, could this be a bearish, flag pattern that we end up here? It very well could be. And that's what is difficult trading the short term. We had a nice flag pattern here, broke to the upside, and then we just crapped on ourselves here. And obviously, it's a stinky situation, but to me, it looks like we could have a little bit lower in the short term. FEF, iron ore. So iron ore is looking fine. It looks fine. So we're squeezing. So the way that I look at the squeeze, and it doesn't have to be perfect. Everybody's looking for the perfect pattern. Selling pressure move, selling pressure move, selling pressure move, selling pressure move, and no selling pressure. That's what I see. You don't need a pattern to see that. I also see the fractal of this and then the come up of it, and that usually breaks upward. It's a very similar fractal to what we saw when gold broke out, before it broke out, and silver. Aluminum down 1.3. It's right at the resistance level. We haven't been able to break it, but I think we're breaking down the selling pressure. What you see is generally you get like a first attempt, and then it sells you all the way down and stays low. You get a second attempt, and then your selling pressure moves you not as far back, not as far back, not as far back, and then you squeeze up into that pressure, and then the buyers overwhelm the sellers. So we'll see if that occurs. We've got nickel down a little bit today, down 0.5%, and it still looks okay. It's trying to do that double bottom thing. We've got Mu down about 0.75%, coming back to support, it looks like, at about $70. Emerging markets, slightly lower. We had a stronger dollar today, and it doesn't like that. But longer term, this was the increase of interest rates. So we had a breakout here in 2020. And then in 2021, you can see this reversal here. And we came on down. That was your currency. That's your interest rates. Here, if you call me a liar, how about this? US 10-year. Put that in a new pane. And this guy here, this big boom, 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 that's increasing the strength of the currency. And at some point, we had a breakout. And then the currency took off. And here, your currency is this guy here. And then it's remained strong against those other currencies. And you can obviously check other currencies too, like Canadian US dollar, and it hasn't broken out yet. It's still squeezing in this corner there. Last commodity bull market was this big boy there. And we are still squeezing into this falling wedge in the corner here, where when this breaks, that's when we're going to get our commodity bull market, weaker dollar. Usually weaker dollar comes with weaker yields. So all of these are tied to this. Here's KRE. KRE looks good. There's no selling pressure up here, and that's what I gauge. If you get reversal patterns, what you'll see is you'll see big selling pressure candlesticks, kind of like this one here. Sometimes you'll get a big reversal, and that depends on the follow through. So we got the reversal candlestick here, but it was a consolidation. Sometimes it's a big, here's another reversal candlestick there. If it doesn't follow through, it's generally a consolidation. Tan down a little bit, doesn't like that stronger dollar. Still working around. Solar just doesn't make any money. That's the problem. This is the money coming into the system, low rates, Biden doing all that stuff, and then kind of lost his cover, which is Biden. Trump's not a renewable guy. Lithium, now this is an energy storage and used in batteries. I think this is going to go higher. I think the chart setups all look very good in the individual companies. We've got the downtrend here, not much selling pressure there. Big kind of short squeeze, we'll call it. And I do think this will eventually work its way on up. It could be a messy transition between the downtrend and the uptrend. Sometimes it'll do like stuff like this or heading on higher. That was I just did a shoulder head shoulder. You like that? REMX, a little bit of selling pressure still in this thing, but for the most part, we had a big move up and then usually consolidate. And sometimes these consolidations are flag patterns or something like that. But I still think it's bullish. Baltic Dry Index down 1.7%. This thing's really been getting hit. It's absolutely, one kick to another kick to the nuts. And it's pulled on back. But this deals with, the overall economy, I think. There's a lot of either selling pressure from tax law selling or the people's opinions and sentiments on what potentially could come with the economy. Slowdown, recession, stuff like that. XHB is more, it doesn't care as much about recessions, it cares more about interest rates. It's a purely supply-demand balance. Some people say, oh, recession and the unemployment going up is going to impact the people buying homes. That is not necessarily the case. Usually, the housing market is what causes the recessions. Generally, it's the leader. But right now, we're on support and we're just sitting there. So when you look at history, this was the COVID crash, and here this is the 2008. So housing peaked before 2008. It was coming down, bearish formation, coming down like that. This was your recession. But the thing is, We're not seeing that action at the moment. We are going up. So I can't say that it's coming from housing yet. Didn't say that it couldn't, not yet. Russell 2000 still looks good. Not much selling pressure yet. Not really being driven lower. All these small candlesticks, they just create flag patterns. Think of it as that. So if you come up faster than you're falling, it is still bullish. SPX, it looks okay. Working its way on up. Same with the NASDAQ. NASDAQ is killing it. Despite 1,000 rising wedges that has gone through, but still going up. SMCI up about 7%. There's probably some short squeeze going on to some degree. NVIDIA down 1.81 right at resistance. We'll see if we can pop back above that resistance trend line or if we roll over. What I would say is it looks bearish because of this coming on down, and then we struggle to get up back to resistance. Resistance is ahead of us, on top of us. It has more of a likelihood of rolling over. Now, I know they don't want people running into commodities or something else. They want to keep everybody in tech. So maybe they push this higher. I don't know. They being the Federal Reserve, government, whoever's behind it. Bitcoin up 2.3%, getting a huge amount of volatility there. Could this go higher? Well, we're sitting on top of support resistance there, so it does look good, and it very well could continue higher, and the momentum is in the upward direction. Ethereum would be the better bet. When it was, we were talking about this down here when we were coming on up. I said your better bet is Ethereum here at 3,300, and now we're up over $4,000. Your risk goes up as it goes up. Some people say, "Oh, it's less risky." Your best opportunity, if you're going to do this, is use Bitcoin as the leader, Ethereum as your laggard, and try to get it down here. Because you broke out of the downtrend and your buy point is actually there. Then you ride it on up, flag pattern, flag pattern, flag pattern, flag pattern. You know, that thing just goes over and over and over. So that's the way that I view it. Your risk reward is the best down here, and obviously it's gone up. And you could have used Bitcoin as your leader there because Bitcoin was already heading on up and breaking out. So that is what I would have done if I were to trade crypto. MicroStrategy, it's up, lost some momentum. This still doesn't look good to me. Whenever you start getting these big red candlesticks that are reversal candlesticks too, and they're starting to show up, that means we could see a potential rollover. It doesn't mean we get that outcome though, but that's generally what we see. And if you look at it from longer time frames, they show up as wicks. Big wicks at top are generally reversal candlestick patterns. Like this one here, there's a big wick at the top there. In fact, we can go back and look at that real quick. We'll do it on a weekly time frame. So we'll go over here. This is on a weekly. So this is when everybody was, oh, it's the best thing ever, going up, going up, going up, going up. This is the 2000 peak. We had a big monster move, boom, boom, boom. And then we reversed very rapidly. Boom, boom. No gap fill. No gap fill. Everybody, all these gaps get filled. I don't know about that. So let's go to the dailies real quick. I just want to go back there and look at the dailies. You guys can see this. So here's the daily candlesticks. So this was just rip, 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 and big red candlesticks. You didn't see the big red candlesticks anywhere in here. But they showed their face all in a row here. That's distribution. So that is what you want to look for in these patterns. And then what generally happens is you get a upward facing flag pattern and then an upward facing flag pattern, and it comes back down. So that is the move there. And what we're doing, so your risk goes up when you go vertical. So whenever you go vertical, you have a risk of doing a consolidation for a while or something else. But this is another vertical move. Then you look for the big red candlesticks. which we have. So that's where we're at. And then the VIX is still going down at this time. No problems there with volatility in the S&P 500. That's what I've got for today. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. That coupon code with the larger discount is going to end tomorrow. I'll nix it. So I'll give you today and maybe into the morning whenever I change it. You're going to be gambling on the Saturday morning whenever I wake up and turn that off. So up to you on what you want to do there. Take a look. It is a larger discount on the yearly membership. It's in the description link below. It's 50% off, $25 a month to try it out to see if you like it. And if you don't like it, you can always just do the 1 month, quit, you're good. There's no contracts or signing up like that. The yearly membership, you're going to be in there 4 years, but you get a larger discount. So you can either be on the monthly membership right now, swap to the yearly, and that would give you the discount because you already know that you like the services. If you don't know, that's the gamble that you got to take. But that's what I've got for today. We'll catch you next time. This is Finding Value.